This interview is for information only and should not be considered as investment advice or a recommendation to buy shares in the company featured. Welcome to this Stock Box interview. Well, joining us today is Tim Clark, the CEO and Director of Fury Gold, listed on the TSX with the ticker Fury, that's Fury. Well, thank you very much for joining us today. Tim, how are you?
I'm great, Mark. How are you today?
Very good, thank you. Of course, it's the first time that you're on Stockbox talking to me. I wonder if you can start us off by perhaps just giving us a bit of a high-level overview of the company and what you're all about.
Sure. Fury is a junior gold exploration company. It's focused in Canada. We've got a number of properties across the continent. Our main flagship, though, is in Quebec. We own a property called Eau Claire, and it's 55,000 hectares, about 30 kilometers wide. It's situated within 50 kilometers of Newmont's Eleonore mine. And we also have a 300-kilometer package Greenstone belt up in Nunavut, up near the Arctic Circle, not far from Agnico in their Meadowbank. And then we also own a property. We've sold the property. It's called Homestake Ridge, but we sold it to Dolly Varden Silver, and we own about 23% of the company. And so I consider that part of Fury. We've got two people on the board, and it comprises about 2/3 of our equity value, about $50 million in equity that we hold at Dolly Varden. But our focus, again, is exploration and the junior space. And I've been the CEO about 2 years now, and we've really sort of turned the company around. We've refinanced the company, and we're actively drilling.
So you've been the CEO for around 2 years now. You say you're well financed and that you've turned the company around. Could you give me a bit of an idea of the sort of the share structure and also the key people who sit on your board?
Sure. So I came in 2 years ago on the board, and then they asked me to step into the CEO role. My background actually was in capital markets for about 23 years. I worked for Barclays, Deutsche Bank, Merrill Lynch, and the last one was Bank of Montreal, which was the number one mining banker in the world. And so I came in, and my focus was really to improve the strategy of the company, to simplify the story. The previous CEO was focused on development, and I wanted to get it back to the roots, which was exploration. And we're actively drilling all three properties at the time. And my focus was to simplify the story, like I said, and go after what we thought was sort of the high-profile opportunities in Quebec, which is the best jurisdiction out there with the support of the Quebec government in terms of financing. And at the same time, I brought in some of my institutional relationships, and publicly Fidelity owns 7.5%. And we brought in another major. They prefer not to be listed and mentioned in sort of interviews, but is one of the top three majors out there in producing, and they took a position, 2.5% position in us. On the board, we had historical directors, both out in Vancouver and in Toronto. We've added more recently Brian Christie, who's the chairman, and I've known him 20 years, and he comes to us from Agnico Eagle. And he's been phenomenal, and he has a lot of history, 40-year sort of run in the mining industry. And then we also added Isabelle Cadeau, who's a former portfolio manager at Sidex in Montreal. She's got 25 years experience investing in small Quebec mining companies just like this. So a pretty nice group to rely on for a junior company.
And of course, you say you've got the three projects there. They're all focused on gold, aren't they? So you're purely a gold-focused company. Is there any reason for that?
No, we're purely focused on gold. We're obviously keeping our eye out for a lot of other metals.
Okay.
Interestingly, we've been testing for everything that as we go across and do these geochem and physical tests across our properties. And we also at the same time think it's a better way of looking for gold anyway, because you're looking for identifying metals that go along with gold. So historically, the property we bought was a company named, this is in Quebec, East Main, and it was to me what I consider more of a lifestyle company where they were just building on the resource itself.
Okay.
And when we came in, what we wanted to do was show that we could expand the resource. It is 1.3 million ounces, and we've increased that strike length alone last year by 25%. However, they're not paying us just to build a resource. The idea is to go after new discovery. And so we've positioned the company, I think, by spending some money on geochem and physical and structural analysis across our properties. And we've identified a bunch of new anomalies that we're intending to go after. We also own a joint venture with Newmont. It's a pretty big piece of property that's just below their Eleonore mine and in between our 55,000 hectares. And we've got some interesting targets on that. And right now it's a joint venture, 50-50, but we're the operator. And then, of course, Dolly Varden owns, what they did was they put together our Homestake Ridge with their Dolly Varden property. It's surrounded, 90% of the land package around it is owned by Hecla, which is one of the dominant silver companies out there. And that's a silver play. But there's a lot of gold there. And when we sold it, the idea was the two properties needed to come together to get economies of scale. They were out there. They knew the property. We wanted them to focus and be experts on what they did, and we were going to be focused on what we were doing. And interestingly enough, they've got 5 drills going. So I consider them a pretty active upside potential for us because, again, that piece of the Dolly Varden represents about 2/3 of our equity value. So that's worth about $50 million bucks, and our market cap's about 80. So you're getting the rest of all the property we have for 30 million minus the 12 to 14 million dollars in cash that we have. So a pretty low value, I think, for what is potentially worth hundreds of millions of dollars.
Okay. And you say you're active across all 3 projects, is that right at the moment? The Eau Claire, the Committee Bay, and the Eleanor?
No, well, we tabled Committee Bay for a little bit. It's very expensive to go up. We had a very good strike up there that kind of reformatted how we think about the property. But they get 1.3 million ounces, and we got a camp. We've got a lot of exploration potential up there. But again, 2 years ago, the market wasn't going to give us a lot of extra cash, and I didn't want to dilute the company. I've been very sensitive about keeping that dilution down. And what we felt like is we had enough drill potential and for new discovery in Quebec. Okay. And what's interesting about this is, when we brought Brian Christie up, who's our new chairman, the first thing he said when he got to Quebec was he couldn't believe the infrastructure. When you go up to Nunavut, it's in the middle of nowhere. I mean, it's very expensive to get up there. It was $1 million just to get the oil up to run our drill program, and that was already halfway there. In Quebec, you can literally drive an 18-wheeler pretty much right up to the property line, and right on the property line, you have the James Bay hydro power projects that have a big dam right there with electricity. Okay. So we're in the AAA category in terms of where we're located for big companies to come in. Okay. They want to save a lot of money, and so infrastructure is important.
So, of course, Nunavut, as we know, it's not active all year round because it's a very hostile place to actually get access to, as you say. Quebec provides more of an opportunity. You think you talked about the previous CEO or the strategy of the company being more about development, and you want to make it more about exploration and discovery, really. So you're going where you feel there's bigger upside, even though you've already got quite significant resources already in some of these projects.
Well, it's about being smart with your money. And when the market's not rewarding you for a big discovery, like to go up to Nunavut, it's better to be prudent with your money and pick away where it's easy to spend money. So it's a lot less expensive us to get a meter in Quebec. And the truth is, we have a partner there with Newmont that basically surrounds the property and anchors the area. And not to mention the Quebec government, they work with you to raise money. So there is huge benefits, tax benefits in Quebec. Even though Canada is great, Quebec is the best.
Okay.
And if we could find a new discovery there, that's where I think real potential to sell the company would be out of that property. Not to take away from Nunavut, we spent $60 million up in drilling up there. Like I said, there's a camp, there's 1,000,003 ounces. That's where you go up to swing the bat. And that's where the 800-pound gorilla lies. And if you can take that and show that there's a 5 million ounce project up there, which conceivably there is, and this is where the new frontier is. So what I liked about the company when I first joined it was I saw an opportunity to finance the company by selling home stake, yet keeping the upside potential for takeout there. I saw the opportunity up in Nunavut that if you get a bull market and you go back up there, potentially like with a partner like an Agnico or a Barrick or whatnot, and I have relationships with all those companies, you can go up there and have huge discovery. Now, on the bread and butter side, we've got an existing resource in Quebec that's 1,000,003 ounces. We're targeting. We'd like to show that we can get to 2 million ounces at some point, which represents a reasonable size resource as a base. But again, we're going to the property that we have in Quebec. It's unexplored. We've generated through a lot of survey work the last 2 years, 16 anomalies that reside all within a mile of this Canard deformation zone that we have property along. We own a third of a 100-kilometer deformation zone. Eau Claire and our sister project that we're developing, Percival, both sit on the bottom left side of the property. And on the eastern side of the property, we've now found all these anomalies that were residing within a mile of the Canard deformation zone with the same geochem, the same physical, the same structural analysis. And if we can show that there's a string of pearls that run along this Canard deformation zone, and we only need one more to show the big companies, that's going to be really intriguing because we have massive infrastructure because of the James Bay project, which powers all of Quebec and most of New England in the US. And there's roads, there's power, and there's access that you can't have anywhere else.
So really, you're talking there, the Committee Bay is your blue sky, let's say, but it's not completely underexplored. It's already pretty significant with a resource there, given...
Nunavut is when the bull market comes back.
When the bull market comes back.
Everybody's going to want to take a look at that property. I mean, in my view, we own 300 kilometers of a greenstone belt, and we've barely touched it. And we've got one of our biggest hits there a couple of years ago, and we got a camp sitting there, and we've actually spent last winter re-looking at a lot of the core samples to readjust how we're going to drill it. But again, we want a partner, and it makes sense as a $80 million company to have a partner. But consider the fact that if you want to do the math, like I said, we're $80 million market cap, $50 million worth of Dolly Varden, $10 or $12 million, plus we have some securities that get us up to like 14 or 15. You're getting this company for, $10 million enterprise value. And we've got $60 million in drilling up in Nunavut on a 300-kilometer greenstone belt that's sitting not far from Agnico. We got 55,000 acres plus 1,000,003 ounces, hopefully going close to 1,000,008 or 1,009, 2 million ounces, plus all Percival project that we pretty sure has got 100,000 ounces there and growing. And that's what we're focused on right now. Plus, we got potential for discovery out in the east, and not including the joint venture that, that's where that hasn't had any drilling there. But if we show that there's a potential mine there, it's within 10 or 20 kilometers south of Eleonore. And Eleonore has a mill that's being used at 50% capacity. And this is one of Newmont's big positions in Quebec. So the goal here is to build and grow this company, look at value opportunities, clean it up. We've taken costs down by almost 50% since I showed up here 2 years ago. And we've brought on much bigger players on the board and also as investors. And my history has been an institutional, as Brian Christie's has been. And as the market starts coming out and we start showing discovery, I think, and I'm pretty confident I can get other institutions to come into this name, not to mention high net worth and retail.
Okay. So these are your bread and butter, as you say, the Eleanor and the Eau Claire, and then it's going for discovery, getting it to plus 2 million ounces if you can. You talk about then different joint ventures that are going on. These are things that elements that are available within the two project areas. Is that right? You could almost put part of the project into a joint venture and develop it on its own, away from the bigger picture.
Well, if consolidation should be coming to this industry. It's too fragmented. It always has been, and it's hard to finance the juniors. What I think investors are waiting for is for interest rates to sort of stop going up. If they just go flat, I think investors are going to see the value of how undervalued the junior and mid cap sector is. If you want torque to the upside, it's the junior names, and that's where you really make money in a bull market for the juniors. And I think we're not far from it. We've been laying a lot of groundwork, but what you want is best in class. And I've having pitched companies and raised money for 25 years. Investors, when they go into a sector like this, the best place that you want to be where you can feel good about is first with good management that's going to manage your money appropriately. And the second is a company that's financed, that's not going to go out of business. And then third is a company that's got potential for discovery. And we've got multiple properties, multiple levers, multiple opportunities to have discovery. And, it is a little risk, but if you catch the junior market at the right time, you can make a lot of money.
You can. And just a final thought on that with a couple of points you mentioned there. What activities are currently going on to enable you to make that discovery? And the obvious question, are you well financed through to the foreseeable future with the plans?
Oh, good question. So we raised $8.5 million in flow last February. We've also sold a little bit of our Dolly Varden. So the way we're going to end the year is going to have $6 million in hard cash in the bank. Plus, we're going to get through our projects this year, and we're drilling right now up in Quebec. We're shoring up what we think is more growth potential coming out of the Eau Claire resource. We have, like I said, 1.3 million. The goal is to grow it and show a pathway to 2 million. It may not be this year, but we're trying. And then the rest of it is going right now into Percival project, where there's historic drilling. There was a discovery in 2018, and we had one of our biggest hits last year at that project. And we're going back there and trying to extend that and better understand it. Plus, we're hoping to get out to these anomalies and explore some of these anomalies that we found last year on the property. And that's going to give us quite a bit of assay results coming. We're hoping to have something in the next 2 to 3 weeks in terms of assay results. Okay. We had some earlier assay results this summer, but there was the forest fire that held things up for about a month. But we have a helicopter, and we've been out exploring with our flywheel out at Percival and these anomalies. Plus, we can drive to Eau Claire, and so we've got 2 drills going through the fall, and should have results coming in through end of year. And again, we're going to end the year with $6 million at least in the bank, so we're pretty well financed. Plus, we can tap into the Dolly Varden ownership anytime we want.
Excellent. Well, thank you very much for that, Tim. I believe we're going to get a bit more of a detailed update from Eau Claire, perhaps from site, depending on the internet connection. We can hopefully get a sense of the infrastructure that's there, the project, and of course the activities that are going on, including that drilling that you're getting into the autumn. But for now, thank you very much for your time, Tim Clark, the CEO of Fury Gold.
Thank you, Mark. It's been great. Appreciate it.
If you enjoyed this interview, then give us a thumbs up, a like, or a retweet. Subscribe to us on YouTube or follow us on Twitter and hit that notification bell to be the first to know when we release new content. There's loads of great content on our website too, across all our programs at stopboxmedia.com. Thank you for watching.